Hey there, investors. Welcome back. Have you ever thought about being the next
The Wolf of Wall Street?
Wolf of Wall Street, or just a calm investor enjoying your coffee while your money grows? Today is your lucky day. We are diving into the ultimate battle, trading versus investing. By the end of this video, you'll know if you're meant to be a high-speed trader or a relaxed investor. Or maybe you'll find that trading is too wild for you, or that investing can be super exciting. We'll break it all down. No big words, no boring stuff, just the good parts. Understanding the difference between trading and investing is super important. It will save you time, money, and a lot of stress. Basics of trading and investing. Alright folks, let's get to it. What is investing? What is trading? And which one can make you rich without driving you crazy? First up, investing. Think of investing like planting a garden. You put your money or seeds into different things like stocks, bonds, or mutual funds. Over time, with patience, those seeds grow into a money tree. The goal is long-term growth. You are in it for the marathon, not the sprint. Investing isn't very time-consuming. Do your research, make your investment, and then mostly sit back and watch it grow. You'll check in sometimes, but it's not a daily job. The strategy is to buy and hold for a long haul. Now trading. Trading is like rolling dice, but you're rolling them over and over again. Traders buy and sell stocks, options, and more, sometimes within seconds. The goal is to make quick money from short-term price changes. Think of it as a high-speed chase in the financial world. Trading takes a lot of time and attention. It's almost a full-time job. You must always watch market trends, news, and data. The strategies range from day trading, buying and selling within a day, to swing trading, which is holding for a few days or weeks. So time-wise, investing is like a chill weekend project, while trading is a never-ending high-stakes game. Risk profiles. Now, let's talk risk. Both investing and trading have risks, but they are very different. Investing, especially with a diversified portfolio, is less risky. It's about managing risk over the long term and growing your money steadily. Trading is like a roller coaster. It has a higher risk, the market can be unpredictable, and you can lose money fast. About 90% of traders fail to make a profit in the long run. So, if you love thrills and can handle pressure, trading might be for you. But if you prefer steady and reliable, investing is better. Know yourselves and what you're comfortable with. What do you think is the main difference between trading and investing? Drop your thoughts in the comments below. Investing. Let's talk more about investing. This is where we plant our seeds and watch them grow into money trees. Investing comes in many types. Long-term investing is buying and holding for years, aiming for steady growth. Value investing is finding undervalued gems. Growth investing is chasing high-flying stocks, hoping they soar. The goal is the same, buy and hold for the medium to long term. Now let's talk tools. Stocks represent ownership in a company. Bonds are issued by governments or corporations and are less risky but offer lower returns. ETFs are like baskets of stocks or bonds, offering diversification. Mutual funds are similar but managed by a fund manager. The magic of investing is compounding. It's like a snowball rolling down a hill, getting bigger. Reinvest your earnings and they start earning their own earnings, leading to exponential growth. Let me ask you, if you invest $1,000 each year for 30 years with a 10% return, how much do you think you have? 50,000? 70,000? Maybe 100,000? No, you will end up with 181,943. That's the power of investing. Investing lets you diversify, reducing overall risk. While there are ups and downs, the market has historically trended upwards over time. Want to learn more about investing? I'm offering free access to my Stock Investing Masterclass for the first 1,000 people. Don't miss out. Click the link in the description. Trading. Now let's jump into trading. Trading is all about timing. It's like playing chess with money. You analyze the market, look for patterns, and make quick decisions to buy or sell. There are different trading strategies. Day trading means buying and selling within the same day, aiming for short-term gains. It's intense and requires focus. Swing trading involves holding securities for a few days or a few weeks, catching market swings. It's slower than day trading but still needs attention. There are many financial instruments to consider: stocks, options, futures, and currency. Each has its own pros and cons. Strategies range from basic pattern recognition to complex algorithms and machine learning. Trading offers quick profit potential but comes with high risk. Many traders fail to make a profit. It's almost like having another full-time job. Next, we'll compare trading and investing and help you decide which is right for you. If you enjoyed the video, hit the subscribe button and turn on notifications for more content like this. Alright, which one is right for you? Let's compare to see which path might be right for you. Time commitment. Investing is like planting seeds and watching them grow. It needs less active management, perfect for busy people or those who prefer a hand-off approach. Trading demands more time and attention, often needing daily market monitoring. Goals. Investing is for long-term growth and building wealth. It's like a solid foundation for your financial future. Trading is for short-term gains, capitalizing on market changes. It's like hitting home runs in a fast-paced game. While there's potential for quick gains, there's also more risk. Risk versus reward. Investing is less risky, especially with a diversified portfolio. It offers a slower growth but a lower chance of losing everything. Trading can be highly rewarding but carries higher risk, especially for beginners. Remember, 90% of traders fail. Which path to choose? It depends on your goal, risk tolerance, and time. If you want steady, reliable growth, investing is the best choice for most people. It takes advantage of compounding, diversification, and reduced risk. Trading can be exciting and profitable, but needs skills, time, and dedication. For most, investing is a more practical choice. If you feel you have a better idea of whether you're a trader or investor, smash the like button. Before we finish, let's go over common mistakes and FAQs about trading and investing. What's the biggest mistake beginners make? Not doing enough research or trying to time the market. Have a long-term plan and stick to it. Investing isn't a get-rich-quick scheme. Be ready for market's ups and downs and stick to your plan. How can I start investing with little money? You can start with as little as $100 through micro-investing apps or low-cost index funds or ETFs. It's a great way for beginners to start investing without needing lots of money. What are the red flags in investment choices? Watch out for high fees, unclear strategies, and unrealistic guaranteed returns. Do your research and choose investments that fit your goals and risk tolerance. Stick with safe options like stocks, bonds, and ETFs. Alright, that's all for today. If you found this video helpful, share it with your friends and family. Together, we can help more people take control of their financial future. Stewardship Finance Academy, turning you into a confident investor.